Near-term dollar positive, but I think it's going to boil down to next month's FOMC.
The US inflation came in above the 2% Fed target last week. However, the dollar remained relatively weak. What do you expect to see next for the greenback?
There was a bit of excitement because of the headline inflation numbers, but the reality is that core inflation and the Fed's preferred PCE, the core PCE price index, have stayed pretty much level over the last few months. So there's a lot of chat now about inflationary pressures building, and we saw the FOMC minutes come out overnight. That had a hawkish spin on it. There were some upward revisions to economic projections, and there's a little bit more optimism on inflation. And we saw yields hit fresh 4-year highs overnight, hitting 2.95% on the 10-year. So there's a bit of life in the dollar. I mean, it's been slammed throughout the year and late last year. And I think economic conditions are obviously quite favorable for the dollar. There's a lot of talk about the US government wanting a weak dollar, et cetera, et cetera. Well, they're going about it the right way with, government debt, the fiscal deficits and everything. I think that's, at the moment, it's probably not going to have too much of a negative impact. But, as the bond market starts getting flooded with note auctions, it's going to be supply and demand. If the demand starts, softening up, and the demand goes elsewhere, like European bonds and stuff, then we could see the dollar slide back again. So I think really it's going to be down to next month's FOMC and the FOMC projections to see how they're actually putting in the rate path for the rest of the year. If they are upwardly revising inflation and economic projections, then you're expecting a fourth rate hike that there was already some chatter on. But I don't think it's just down to that. I think government debt and stuff like that is also going to be an issue. So near-term dollar positive, but I think it's going to boil down to next month's FOMC.
The crisis in Latvia has caused some issues for the ECB this week. Do you expect this to affect Draghi and co moving forward?
I don't think Draghi is going to be directly affected. At the end of the day, the Latvia central bank governor was automatically elected into the ECB when Latvia joined the euro in 2014. And when you're looking at anti-money laundering laws and bribery and stuff like that, that doesn't necessarily fall under the ECB's remit. The problem within the euro, which is unlike the US, the eurozone faces member states, so they're actual individual national countries. So any fraudulent activity or anti-money laundering issues goes up the chain nationally rather than centrally into the ECB. So until the European Parliament decides to change the laws and they centralize it, I don't think many member states are going to really want that to happen. I don't think the ECB is going to be tarnished. I think there's a lot of embarrassment because obviously the US discovered it and not Europe. But I think they'll get over it. And I don't think it's going to have any impact on their credibility from a monetary policy perspective.
Finally, let's jump over and look at the UK. Some fairly positive data came out this week, meaning good news for the pound. Do you expect this to continue, and what do you expect to see in the next few months?
One of the things with all the Brexit negotiations is it's removed focus from macroeconomic data and the UK economy and ultimately monetary policy. So the market sentiment's shifted a little bit. The view is that Britain will be able to leave the EU on more favourable terms, and from that perspective, if that does hold water, then we're moving back towards the pound responding to economic data. We saw yesterday the rise in the unemployment rate hit the pound a little bit. The markets are still waiting until next month for the EU Brexit talks to begin again and for the transition period to be ironed out. So I think until that really does happen and there's some real clarity in terms of the transition period and how trade's going to look on paper, because obviously it's not going to be legal until after Brexit, we're still going to have that Brexit issue. But I do think we are beginning to move back to monetary policy a little bit. And Carney was speaking in the inflation report hearings yesterday He said very much similar things, that we're moving back to the pound responding, and assuming that talks go well next month on Brexit, then based on the economic data we're looking at, then there's no reason why the Bank of England might not make a hike in May. So that would then be pound positive.